I just dropped $50,000 into SCHG. That brings my total position to $290,000. And I didn't do it because I think it's a good ETF. I did it because I know it's one of the best wealth building plays in the stock market right now. Here's what you need to understand. We are at the start of the biggest technology boom in history. AI is not a fad, it's not a bubble, it is fundamentally changing everything. And the companies leading this revolution, they're all inside SCHG. The reality is most people have no clue how to invest. They chase random stocks, listen to hype, and jump in and out of trades. And that's why most people lose money. So let me make this simple. If you care about building wealth, you need to be in growth stocks. And if you don't want to invest the time to analyze individual stocks, you can let SCHG do it for you. I'm about to show you exactly why I put another $50,000 into this ETF, why it's beating almost every other fund, and why it's a money printing machine for long-term investors. And if you don't take this seriously, you'll be looking back in 5 years wondering why you didn't buy in when you had the chance. Let's skip the opinions and go straight to the numbers, because math doesn't lie. Here's how SCHG stacks up against the biggest ETFs in the market, and we're looking at the 1-year total returns. SCHG is up 28.92%, Triple Q 24.22%, BGT 24.28%, the S&P 500 is up 22.8%, and SCHG is bringing up the rear, up 9.15%. If you're investing for growth, SCHG is crushing the competition. It's outperforming the S&P 500, it's beating the Triple Q, and it's obliterating SCHD. And it's not just a 1-year fluke. Since inception, SCHG has delivered an average annual return of 16.66%. That means if you had put $10,000 in SCHG just 10 years ago, you'd have over $47,000 today. Now, let's talk expenses. Most people don't even think about this, but the fees on an ETF can wreck your returns. That's why SCHG's super low 0.04% expense ratio is a game changer. For context, the Triple Q charges 0.2%, that's 5 times higher than SCHG. BGT charges 0.1%, that's 2.5 times higher than SCHG. So if you're paying 5 times the fees, you better be getting 5 times the results. You're not. So what's the conclusion? You can pay more in fees and get lower returns, or you can buy SCHG and make more money. It's not a question of if SCHG is a better ETF. It's a question of how much money you're losing by not owning it. And let's get one thing straight. Tech isn't the future. It's the present. And if you're not investing in it, you're already losing. Right now, AI is restructuring entire industries. The companies that control AI will control the future of business, productivity, and wealth. And guess what? The biggest winners are already inside SCHG. Let's name some names. Apple, still a cash machine, still dominating hardware, and soon AI-powered everything. Microsoft, they basically own OpenAI and have a monopoly on enterprise AI software. Amazon, AWS is printing money while AI supercharges e-commerce and logistics. And my favorite, NVIDIA, literally powering AI with its GPUs. No NVIDIA, no AI, period. Then we've got Google. Their AI research is unmatched and they own the world's data. These companies are not going anywhere. They win consistently, and SCHG is stacked with these names. Now you might be thinking, why not just buy these stocks individually? Because you don't know which one will 10x next. And if you pick wrong, you can get wrecked. Here's the reality. Tech dominates every bull market. AI is just getting started. And SCHG, it lets you ride the wave without betting your entire portfolio on just one stock. So here's the real question. Do you want to own the next decade, or do you want to sit on the sidelines? Look, most investors suck at picking stocks, and it's not their fault. The game is rigged against them. They chase hype stocks right before they tank. They buy high and sell low every time. They think they're Warren Buffett after one lucky trade. But here's the problem. Individual stock picking requires a lot of time and research. Let's say you dumped your savings into Facebook in 2022. You'd be down 77% at one point. And if you panic sold, it's game over. This is where SCHG wins. Instead of trying to guess the next Amazon or NVIDIA, you own them all. If one explodes, you profit. If one tanks, you don't get wiped out. But here's the best part. SCHG is tax efficient. Unlike actively managed funds that constantly trigger capital gains taxes, SCHG lets your money compound untouched. So let's summarize what you get with SCHG. You avoid picking the wrong stock, you stay in the strongest names automatically, you keep more money thanks to tax efficiency. Now let me give you the 5 reasons SCHG is a must-own. If you're still not convinced, then I don't know what to tell you, but let's make this stupid simple. Number 1, exposure to the best growth stocks. You get the strongest companies, Apple, Microsoft, Nvidia, Amazon, without stock picking stress. They dominate, you profit. Number 2, an ultra low expense ratio at 0.04%. This thing is basically free. Meanwhile, people are out there paying 5 to 10 times more in fees for worse returns. That's robbery. Number 3, tech-heavy allocation equals explosive growth. Almost half of SCHG is in tech, and tech outperforms in every major bull run. If you believe in AI, you have to be in technology. Number 4, it outperforms in bull markets. Growth stocks win over time. When the market rips, SCHG beats the S&P 500. And guess what? We're right now in a bull market. And number 5 is tax efficiency. More money in your pocket. Since SCHG is passively managed, it doesn't constantly trigger capital gains taxes. That means your money compounds faster. So let's cut the BS. Do you want higher returns? Do you want lower fees? Do you want tech exposure without stock picking stress? If the answer is yes, then SCHG is the move you want to make. The winning strategy is buy and hold. Here's how most investors destroy their own wealth. They try to time the market and they fail. They panic sell when stocks drop and they lock in losses. They chase hot stocks at the peak and they get crushed. The truth, compounding is undefeated. In the last year, SCHG is up 28.92%. In the next 5 years, tech will dominate. In 10 years, you'll wish you started sooner. Short-term investors lose because they don't let compounding work. They get scared, they overtrade, they burn through their own money. Me, I'm very diversified. I have long-term buy and hold ETFs like SCHG. I also trade options weekly, and this week I made $11,760. I do extensive research and invest heavily into companies I believe in. There are a lot of reasons why I made over $1 million in stocks and options last year, but let's not forget I have ETFs like SCHG in my portfolio because smart money plays both offense and defense. Because here's the deal, the market always rewards the long-term investor. It punishes the ones who panic. So let's be clear. SCHG is not ever going to 3x in a year, but it can make you rich over time, and isn't that ultimately what you really want? Alright, let's get real. If you made it this far and you're still not convinced, then either 1, you don't believe in tech and AI, which is insane, or 2, you think you can outtrade the market, which is pretty ballsy since most people cannot. If you're serious about building wealth, you need a long-term strategy that actually works, and here's what works. 1, buy growth. Tech and AI are going to dominate the next decade. Number 2, buy low-cost ETFs. Fees kill your profits. SCHG keeps them near zero. And number 3, buy and hold. Compounding works, but only if you let it. And here's what doesn't work. Buying garbage stocks that might 10x. Number 2, paying high fees for mediocre returns. SCHG is the cheat code. You get elite growth stocks, ultra low fees, tax efficiency, and massive upside. So here's the real question. Are you going to actually do something about it, or are you going to sit on the sidelines while the people who understand this get richer every year? You already know the answer. Let me be blunt. I made over $1 million in 2024 from the stock market. And I'm currently up over $250,000 year to date, which is only 1.5 months into the new year. That wasn't luck, that wasn't gambling, it's strategy. And that strategy is why I win. Most people lose because they don't know what's hot in the market, when to get in, when to scale up, when to cut losses. They make random investments based on emotion, Twitter hype, or hot tips from their broke friends. And then they wonder why they're not making money. I don't guess, I don't chase hype. I make calculated decisions based on real data. And if you want that edge, you need to join my Patreon where you'll get real-time trade alerts so you never miss big moves. My top plays every week so you know exactly what I'm buying. the exact option strategies I use to print cash every week, and my daily list of hot stocks. You can keep guessing and hoping, or you can follow someone who actually makes money. You've got the facts, you know the numbers, SCHG is a winner. I just put another $50,000 into this ETF because I know where the market is going. Tech and AI are the future, and I'm positioning myself to win long term. The only thing left, what you do next. You can sit on the sidelines, overthink it and miss out, or you can take action, buy SCHG, and let compounding work for you. I'm holding SCHG for the long haul. The question is, will you?